So thanks everyone for tuning in. It's a beautiful day outside in Halifax, and I appreciate everyone coming on our webinar here today. We're going to be talking about first-time home buyers. As you know, most first-time home buyers are getting a mortgage, and they can't buy a house if they don't have the ability to get a mortgage. So we're talking about what does that look like, a few tips and tricks. And we'll answer as many questions as we can. So basically the way that we have this set up is it's going to be a 30-minute webinar, and I'm going to give as much information as I can in 30 minutes. And if you have any questions, feel free to ask it. In your GoToWebinar technology, there should be a drop-down where you can write questions to me directly, and then I'll answer it for the entire group. We're also going to record the webinar so we can upload it on YouTube and put it on our website and social media down the road. So hopefully this will be good information for everyone. So let's get rolling. A little bit about me. I've been a mortgage broker for 13 years, and I've been in this office for 10 years. I've seen 5,400 transactions, and I can tell you I really have seen it all. Nothing surprises me anymore. My goal is really around education, and I think that's one of the big reasons that we're on this webinar here tonight, is to give you as much information as we can. And I think home ownership is part of the Canadian dream. So, you know, really, as being a consumer, we want to give you as much information as we can. The reason that I really did start my own office was I wanted to offer solutions that were really customer-oriented. I can let you know that about 60% of my clients are repeat. So I think that really speaks to our clients feeling like they're getting expert advice and they're coming back and we're doing multiple transactions for them. You know, the financial well-being of our customers really is number one, because I don't think this is just a one-off, you know, we're going to do one transaction and then I never talk to our customers again. We're seeing the same customers over and over again. So here's a little quote. I think it's really exciting time for first-time home buyers. I think home ownership is part of the Canadian dream, and I think it's very realistic here in Halifax and Atlantic Canada. I said this on Global News back in March, and I think it's more and more true kind of every day. Halifax is on the verge of a boom, I think, and I think Atlantic Canada is a great place to live and a great place to work and do business. Here's a little bit of outline of what we're going to go over here on our webinar. What does it mean to be a first-time home buyer? How is the process different for first-time home buyers? Are you ready? How do I save for my down payment? What opportunities are there for first-time home buyers? Should I get a pre-approval? And when should I speak to a mortgage professional? And is there anything else that I need to know? So again, if you have any questions that aren't outlined here in these topics, I'll certainly probably throw a few things in here and there, but you can certainly ask any questions, and we'll go through as many as we can. So what does it mean to be a first-time home buyer? You might be surprised. Someone who has not purchased a home before, or who has not owned a home in the last 5 years, or someone who has become recently separated or divorced. The federal government is changing the rules around first-time home buyers. And a lot of times people are like, well, what are the incentives around first-time home buyers? Specifically for the down payment assistance, specifically for access to RSP funds, you can be considered a first-time home buyer again now if you've become separated or divorced recently. That is coming into effect in January. So if you've gone through a separation or if you've gone through a divorce, then you can certainly access some of these programs again. So that's going to be coming up here soon in the new year. How is the process different? The process of getting approved for a mortgage as a first-time home buyer is a little bit different than for an existing home. You have access to government tools such as the Home Buyers Plan and provincial down payment assistance programs and potential tax credits. So specifically in Nova Scotia, If you're a first-time home buyer and you're buying a new construction property, you can get a tax credit in Nova Scotia, which is really exciting. So that's basically free money from the government. In terms of RSP, as a first-time home buyer, you're able to access funds out of your RSP tax-free. There also is a Nova Scotia program, down payment assistance program, that you may qualify for as a first-time home buyer. Are you ready? Well, I think that's kind of an individual question. Everybody's ready at different times. You know, I saw a couple in my office today, and I think she was 43 and he was 46, and they'd never owned a home before. They'd always rented. And they're like, well, we think it's kind of a bit late. Like, we don't know if we can pay off this mortgage before we retire. I mean, really what I told them is, I think the time is now. I think if you're not ready to proceed now, it's going to become even more unrealistic next year, because if we do have a boom and the prices are going up, it's going to be even harder for you to be able to afford it or qualify down the road. I also think that renting is kind of like paying somebody else's mortgage. So would you rather not be paying yourself? So these are some of the takeaways that they had. And I also said to them, I'm like, a lot of people are carrying a mortgage into retirement. That's realistic. And, you know, when you think about it, you know, paying a mortgage is kind of like paying rent. Although you own the property, you are paying a bill every month. And, you know, if you're in retirement and you're paying a mortgage, it quite possibly could be cheaper than renting. So that's something that we can certainly talk about. And buying your first home is often the biggest purchase of your life. Everybody's situation is a bit different, so this question is a little harder to answer, as you can imagine. For most people, it comes down to income, assets, and credit, and it translates really into affordability. You will need to compare the cost of renting with the cost of home ownership to determine if home ownership is right for you. So, on down payment, how are you going to save? I think it's a great question. I think saving is really challenging. I think we live in an instant gratification world. I think saving is more challenging now than it ever has been in the past. Usually what I tell people is to automate it. That's the easiest way. You know, I think that, you know, going into an RSP contribution that's automatically debited from your payroll or automatically debited on payday, that's a great way to do it. Putting money into a TFSA, something that takes it out of your everyday bank account and gets it into another account that you can't touch, that's the easiest way to do it. And you have a number of ways to do it. We talked a little bit about RSPs. You can also use TFSAs, savings, tax refund. That's a great thing at tax time. Gifted funds or borrowed funds. More and more and more Canadians are getting gifted funds. So the good old bank of mother, father, brother, sister is a great bank to access. And, you know, gifted funds are definitely on the rise. You know, RSPs are great. You have 15 years to pay the money back. TFSA, savings, you know, that's ideal. You don't have to pay anyone back. You're just going to use your own resources. And, you know, on a case-by-case basis, sometimes borrowing the down payment makes sense. So that could be borrowed from a loan, a line of credit card, probably less ideal. There are solutions. So I think it's just looking at everyone's situation and figuring it out. The minimum down payment in Canada is 5%. And anytime that you put less than 20% down, you need to get a mortgage that's insured with a Canadian Mortgage and Housing Corporation, Genworth, or Canada Guarantee. And realistically, and right now I know it sounds kind of odd, but to get an insured mortgage, so less than 20% down, those borrowers are getting a lower interest rate than the borrowers putting down 20%. You would think the bigger the down payment, the lower the rate, but it's not really the way that it works. So, are you ready for a pre-approval? Should you get one? I get asked these questions every single day. And I honestly think that a pre-approval and a good pre-approval is the very first place that you should start. You need to know really what you can afford. You need to know what your credit looks like. You need to know what your assets look like. And we ask all these questions. Typically, when we meet with someone to do a pre-approval, we like to spend about an hour with them just so we can get to know each other, ask them a bunch of questions, and figure out the path that's going to work the best. There's lots of times we meet with people and maybe they're not ready, but we give them a plan. And I think having a plan is half the battle. And I think that starting with a pre-approval is the way to go, because you don't want to make an offer on a property and then find out that you can't be approved. Believe it or not, 2 times today alone, I received a request for a rush because they were into their bank branch and they couldn't get an approval. And I'm like, okay, I can do this. But, it's not ideal. It's very stressful because they've already made an offer on a property. So I think starting with a pre-approval, and I think coming to an unbiased mortgage professional like me or my team is the very first place to start. And a pre-approval really streamlines the process. In all cases, a pre-approval is an important part of buying a home. It helps you understand what you can afford, and it shows you that you'll be approved when you make an offer. My one caveat is things do come up. A pre-approval is really subject to the lender and the insurer, in most cases, liking the property. Oftentimes, when there's an issue with a pre-approval, it's either something popped up that we weren't aware of, usually on the borrower's end, or there's something wrong with the property. The bank didn't like the property for whatever reason. So, it happens. When should you speak to a mortgage professional? I think the answer is easy. I think starting the process sooner is better. And specifically, if you don't know where you're at, you need some advice, come talk to us. It is free. Mortgage brokers are one of the only things in life that doesn't cost. Every Canadian can get a mortgage. It really comes down to rates, terms, down payment, and you need to be able to like the terms. The sooner you speak to someone like me, the sooner you're going to be able to understand what you can afford and to simplify the process of becoming a homeowner. What else do you need to know? I think that there's lots of things that you really need to know, and I think that coming to someone like me where you're really able to go through those things, everybody's situation is different. It's kind of like a snowflake. Everybody's situation looks different, from the income to the assets to the credit, and I think that we're really able to put that all together. So we had some questions submitted up front. So let's go through and answer as many of these as we can. We have about 15 minutes. I'm also going to jump on our webinar technology and see if anybody's asked any questions. Not yet. So if you want to ask any questions, you can certainly ask. So let's start with some of the questions that you guys asked. What is new from the federal budget? Great question. So whoever asked that one, you get a little gold star. Recently, the federal government released the budget, and they changed a few things that's going to impact first-time home buyers. So they are now allowing you to take up to $35,000 out of your RSP tax-free as a first-time home buyer. That means $35,000 for an individual and up to $70,000 for a couple. That's a lot of money. So if you have the savings in the RSP, you can now access them, and that's making it easier for Canadians to really secure mortgage financing and to buy a home, which is great. They've also implemented the fact that people who are separated or divorced can become first-time home buyers again, and that is going to be effective for January 1st. Starting in September, they're also offering an equity assistance program. So basically what that means is the federal government is going to basically become a part of the mortgage lending process, more than they are just with their ownership of the Canadian Mortgage Housing Corporation. So what happens is, for a new construction property for a first-time home buyer, maximum $500,000, they would put in $50,000 towards the down payment. So if it's a $500,000 property, they'll put in $50,000. You still need to put down your minimum down payment of 5%, but then you have a mortgage for 85% of the purchase price instead of 95%. So essentially, it's going to reduce your mortgage payments by about 10%. But then what that means is the federal government is going to own 10% of your home. You don't need to make any mortgage payments. There's no interest towards this. You either need to pay them off in 25 years when your mortgage is paid off or when you sell the property. Just to clarify, what happens is where they own 10% of the property, if the property appreciates, so if the value goes up, then they're going to get more than 10%. If the property goes down in value, then they're going to lose a little bit. They're basically going to be in bed with you. And for some people, they're not comfortable with that. There's pros and cons. And, I think that's really something that we can go through and give you our advice. I think when people are buying at the top of their affordability and they're willing to take the risk that if the property does go up, they're going to have to pay back more than the 10%, then that's great. It's not going to be a program for everyone. And you may be wondering, well, what happens if it's not a new construction property? They're still running the same program. It's just they'll only give 5% towards the down payment. So that's starting in September, so there should be more details coming on that soon. Some people are asking me if they should wait. It's not going to impact your affordability in terms of you getting approved. It's just going to reduce your mortgage payments. And is it going to be worth it at a cost of the government owning a part of your house? Maybe, maybe not. So I think that's an individual kind of discussion to be had. What's the deal with purchase plus improvements? This is an interesting one. And we get asked this question a lot. I would say that probably about 30% of the purchases we do have an improvement component. So the rule of thumb is that we can finance up to an additional 10% of the purchase price for improvements. And so here's an example. If you buy a home for $400,000 and you want to renovate, let's say you want to put in a new kitchen and that's going to be $40,000, then we can finance the entire project for $440,000, and we can finance up to 95% of that $440,000. Typically, 10% and $40,000 is the max that the lenders will finance. It's a single advance product, so that means that you have to complete all the work before the funds for the improvements are released. Typically, the lender will give you 90 to 120 days to complete the actual work. Some lenders will go above 10% of the purchase price, but typically $40,000 is still the cap. Where are mortgage rates headed in 2019? I don't have a crystal ball, but I can tell you as of late, they're going down. So right now, a good 5-year fixed rate is 2.74, and a 5-year variable is 2.95. Typically, the variable is always lower than the fixed, but right now, as you can see, the fixed is higher, or the fixed is lower than the variable. So I think that whether you go variable or whether you go fixed, I think that there's pros and cons to both. And just to recap, 5-year fixed, 2.74, 5-year variable, 2.95. And you don't ever think that, okay, fixed, you think that that's going to be a higher rate because you have the security, but right now it is lower. So the pros of the fixed is you know what your mortgage payment's going to be, and you know what it's going to be during that period of time. The pros on the variable is it kind of prepares you better for the market. So if the market does go up, when it comes up for renewal, you'll be better prepared than the people that are in the fixed. So let's say that the rates are 2.79 now or 2.74 now, and in 5 years they're 5%. The person in the fixed rate is going to have a lot more shock than maybe the person in the variable. The other pro on the variable is historically it's been lower than the fixed. And if you need to break your variable rate mortgage early, you're only going to pay a penalty of 3 months interest to get out. What's the deal with the Nova Scotia Down Payment Assistance Program? Great question. Nova Scotia is running a program across the province, typically for medium to lower income households, to help them get in and become homeowners. The way that it works is you need to basically qualify to get a mortgage, but you don't have the money for the down payment. You'll still have to cover the closing costs on your own. And with the Nova Scotia program, there is a max that they will allow in the household. In some areas, it's $60,000, and in Metro, it's $75,000. So that's the max household. And then they'll cover the 5% down payment up to a certain max. So that's something that we can certainly go through and see if that works for you. So, other questions? Let's just check on here and see what we have. I don't know if there were any. Okay. Well, I'm sure I can talk about other questions because I get asked these questions all the time, every day. We still have about another 5 or 8 minutes. So, one of the big things that I get asked all the time is around a cashback mortgage or a zero down payment mortgage. Typically, those still exist, but they're very costly. So right now, with a cashback mortgage, you're looking at the posted rate, and we've done some recently, and they're in the mid 5% range. So I just mentioned that the fixed rates right now are 2.79. On a cashback, you're looking at about 5.34, 5.44, or higher. Credit. I get asked about credit all the time. So what is a good credit score? You know, who are the credit reporting agencies? What happens if I've had some credit issues? Again, it's kind of an individual conversation. But, you know, there's 2 credit reporting agencies in Canada. There's Equifax and there's TransUnion. And the score is out of 900. Typically what we say is a score over 720 is what we consider stellar. And we can certainly go through everyone's individual credit and figure out, you know, exactly what's going on. I think getting pre-approved really is very important, and really setting your budget and figuring out where you're at, and don't, you know, kind of vary from that budget. Improvements. You know, I get asked, you know, really what should you do? You know, I think that putting in a in-law suite that has a lot of value for people. We see a lot of kitchen renovations. We see a lot of bathrooms. We see, you know, fixtures that get updated, decks, windows, roofing, and flooring. You know, I think that the old adage is buy the best house or buy the worst house in the best neighborhood. And sometimes that worst house needs some improvements, especially if you don't have the savings to do the improvements on your own. I think doing Purchase Plus is great. And, you know, you really just need to have the ability to, you know, get the work done and make sure it's done in a timely manner. One thing that really comes up a lot when we're doing pre-approvals is we like to read our clients a little bit of the Riot Act. We like to tell them that don't go buy a new vehicle, don't change your job, don't take on any additional debts, don't have any credit inquiries. We typically tell them to just hold the line and not change anything with their financial health or wellness. Typically, a pre-approval is good for 120 days. And if you don't find a home in that period of time, then what we'll do is we'll refresh the pre-approval. Typically, we'll get new income confirmation, so maybe we'll ask for a new pay stub, and we'll get a new credit consent. And typically, the pre-approval is made up of 2 things. It's made up of a rate hold, so we're holding the interest rate, and we're also doing a pre-qualification to figure out what you can actually afford. When you're getting ready for your pre-approval, I think doing some credit monitoring on your own has a lot of value. Recently, today, I think we posted on social media, so you can check it out on our Facebook group. It's Clinton Wilkins Mortgage Team. You can check us out on Facebook, or you can go right to our website at teamclinton.ca. We posted about credit. So just what does credit look like, some good practices for maintaining good credit, and we put some links in there for some free credit monitoring services. So there's lots of good stuff on there. And I think chipping away at your debt when you want to do a pre-approval is important. You know, some people come in to get a pre-approval after they've gone through a bankruptcy or a consumer proposal, and it's possible, but if it's still showing on the credit bureau, typically obviously they need to have good reestablished credit, and sometimes it's a case-by-case basis. You can't typically get a pre-approval. We would need to have like a real solid deal. So let's just circle back. If you guys have any questions, you can certainly ask them in our little side panel, but we don't. We had so many questions last time, so I think we're going to wrap up a couple minutes early. Feel free to circle back with us. You can either reach out to us in the office or send us an email. And if you do have any questions, you know where to find us. And I'm going to switch it onto our next slide here about getting in touch. So all our contact information is here on the screen. So if you want to take a picture of the screen, you certainly can. All the contact information is on here. Our address of our Dartmouth office, telephone number, email, website, it's all right there. So feel free to take a picture of the screen or a little screen grab or a snip, and you can certainly feel free to reach out to us. So thanks everyone for tuning in. And as I said, I know there's a couple people who come on and off during the webinar, so if you did miss it, we're just wrapping up now. We will post it on our YouTube and have it on the website. So thanks everyone. Have a wonderful day. And you know what? Thanks for watching. Chat with you soon. Thanks. Bye-bye.